But now we're actually going to take a closer look at how the split Congress could really shape the U.S. economy going forward. I'm joined by CGTN's global economics analyst and the CEO of BERI, that's Saruhan Hatipoglu. Welcome back to the show.
Pleasure to be here.
Now, it's interesting because Wall Street seems to be a better predictor than pollsters when it comes to these elections. What was it that they seemed to build into this when it came to the outcome of these elections?
Well, let's remember that October was a horrendous month for Wall Street as well as global markets. Trillions of dollars were lost. So this was a relief rally. It was broad-based, which is very encouraging. But it was all about the gridlock. Wall Street does love gridlock in Washington because if Democrats won the House and the Senate, we would have a completely different day today with the markets down, dollar losing value. If the Republicans won both chambers, then we would have probably a faster or stronger rally, which would exacerbate and make all these excesses even worse with an overcrowded trading, and the US dollar would gain value too. So they got what they wanted. They're very happy. They know that there are not going to be any rollbacks on regulations, and we've seen that today.
So then in terms of advice for investors, now that they can essentially put the midterms behind them, how are they looking at the US economy?
Well, investors have not changed anything about the economy. And the midterms, I think, were a little bit exaggerated in terms of its impact on the investor psyche. Look, I'm talking to investors, I'm talking to clients, and they're saying Federal Reserve, Federal Reserve, Federal Reserve. China comes after they say Fed 3 times. So the trade issues, of course, is a problem. We are at a trade war now. There are good signs that there will be a meeting between the two leaders very soon, but that doesn't mean, and in my opinion, it won't be resolved anytime soon. But Federal Reserve is in their minds. How fast the interest rates are going to be raised. We're looking at employment numbers again, unemployment numbers. They were really good with a lot of jobs being created. At some point, inflation is going to be pushed up. And this Federal Reserve is different than the previous two. Mr. Powell is very, very careful about inflation, and we'll see more increases.
Now, it's interesting, when you look at the mindset of voters, a lot of them perhaps didn't like the rhetoric from the president, but they couldn't really deny how well the economy is going. So what aspects of the economy do you think would have hit home for voters?
Well, I think it was not the economy this time, Rachelle. Look, we had an economic growth for 9 years. People are used to it. Yes, tax cuts work to a certain extent, but the exit polls, if you look at it, when they asked whether the tax cuts helped Americans, 45% said, the exit polls, we didn't feel it. 23% said we were actually hurt by it. But it was healthcare and immigration. And one thing that President Trump did well in this campaign, going against his advisors, was not focusing on the economy, but going after immigration, putting his base or galvanizing his base. And it worked for him in the Senate.
So we know how investors feel about a split Congress, but how do you see this impacting the president's economic priorities as he tries to push them through now with a bit more resistance?
Oh, there's going to be a lot of horse trading. And we've heard it today, too, with Nancy Pelosi saying all corporate tax rates can be brought up as part of a wider budget agreement. And today the president said, well, I'll take a look at it, because he knows now that he has to work with the House. I can tell you for sure that the tax cuts are not going to be made permanent. I can tell you that the Democrats are going to go after hedge funds and private equity firms, increasing their taxation. Those are some things that will happen. And the financial industry, I think the Democrats in the House are going to take measures to not allow Dodd-Frank weaken more. So there's going to be some changes, but in terms of rolling back the regulations, in terms of rolling back tax cuts that have happened, that won't happen, and that makes the market very happy.
Now, this didn't just generate a lot of interest domestically. The world was essentially watching these elections. So now that we have a split Congress, what does this mean for a lot of these trade deals that are still up in the air, as well as this trade standoff that China has with the U.S.?
Well, if they watched President Trump's conference today, press conference, they thought that he won everything. So, but no, look, House has a lot of say on trade deals. They have to ratify this, whatever the president named new NAFTA. It has to be ratified by them. And it's not going to happen very easily. We're going to go into January, February, maybe later in next year. That means that investors or business people are still in an uncertain period. They're trying to redo their supply chains. They're trying to understand what is going on. Now, if the Congress or the House uses its leverage toward this and pushes the president into a corner, then I'm thinking, well, that will have an impact. That will weaken the president's hand when he's dealing with China. So trade issues are very, very interesting. A couple of really interesting months are ahead of us.
So then as we look ahead, we know that there are some analysts saying that there are perhaps early signals or that perhaps the US is ripe for a recession. Are there any signals or anything that we should be watching for, say, in the next 2 years that we should be keeping an eye on?
Yes, we should be looking at, first of all the growth measures have been front-loaded. We're seeing wonderful 4 points and 3 points changes now. That's not going to be there in the next couple of quarters, especially in 2019. I'm not going to make a recession call for 2019, but towards the end of next year, we're going to see some serious slowdown. And unless new measures are introduced, and those measures have to be fiscal because Mr. Powell is not going to ease monetary policy. And that's another thing that the two sides can actually get together on infrastructure spending, because both sides want it. But will the Democrats give this president 2 years before next elections a win on infrastructure? My vote is no on that.
All right, we know that all votes count, so thank you so much. Saruhan Hatipoglu, our global economics analyst and CEO of BERI.